think one of the great dangers in the international monetary system today is actually stablecoins. But it would only take one fraud to start a panic in the market, basically a run on the bank. You could be looking at a global monetary crisis triggered by a crisis in stablecoin. To me, that's a ticking time bomb waiting to explode. I would say that I'm very oriented to risk and things that can go wrong. It's great when things go right, and we look for that in our forecasting. But I'm always on the lookout, as we say, for things that can go wrong. I think one of the great dangers in the international monetary system today is actually stablecoins. And people are surprised to hear me say that because they say, well, the name itself, Stablecoins, isn't it stable? The answer is it's extremely unstable from a systemic point of view. Now, maybe I should just take a minute and explain what a stablecoin is. It's a kind of cryptocurrency, but it's not meant to jump around in value like Bitcoin, goes way up or way down. I'm not going to, guess where Bitcoin's going to go. But in a stablecoin, there'd be a sponsor, an issuer of the coin, and hypothetically you would give them $1 and they would give you one coin. Now, it can be any ratio you want, it can be any currency you want, but the idea is there's a certain unit of currency paid for a coin, and then it maintains that value. It doesn't go up or down. So if at some future point you want to get, in my example, want to get your dollar back, you contact the sponsor, is probably an exchange or, just online, obviously, and you redeem your coin and get your dollar back. So very simple transaction. So let's look at that from the point of view of the user and also the point of view of the sponsor. So for the sponsor, it's fairly straightforward. They get the dollar, they issue the coin. The question is, what do they do with the dollar? Or $500 billion, which the market is kind of growing to that level. The answer is they invested in something. Now, if they're going to promise to redeem it pretty much on demand, dollar for dollar, they need to invest obviously in very liquid, very safe instruments. So typically Treasury bills would be the instrument of choice, U.S. Treasury bills. That is one of the largest, safest, most liquid markets in the world. I've had many years of experience working at one of the investment banks that was a so-called primary dealer. That means you have permission to deal directly with the Fed. I talk to the Federal Reserve every day, so I know how that market works and how liquid that is. So you buy all these Treasury bills, but here's the point. Treasury bills today have a yield close to 4%. It moves around a little bit, but it might be 3.5% or so, but close to 4%. But the stablecoin itself has no yield. So the person who buys the stablecoin gets the coin, but the sponsor gets the money and buys Treasury bills and makes, my example, and this is the market rate, 3 or 4%. Well, take that up to hundreds of millions or billions of dollars, and you can see that the sponsor's making an enormous amount of money with no risk. And this is an unregulated market.
Rickards is exposing a massive arbitrage here. You take the risk holding the coin, but they keep the yield from the Treasury bills. It is the perfect business model until it breaks. If you want to stay ahead of these hidden market risks, make sure to hit that like button and subscribe to the channel right now.
So your leverage can be as high as you want. At least banks can do something similar, although they have to pay interest on the deposits, and there are limits on risk and leverage. In the stablecoin market, there are no limits. So you can have, as I said, as much leverage as you want and make all that money and keep it. So and the costs are quite low, highly scalable business model. There's some costs. You need your servers and your processing centers and some other paraphernalia, but not that expensive and completely scalable. Meaning once you get that in place, you can take your issuance as high as you want. And of course, the leading stablecoin is Tether. Now, how does that look from the user's point of view, the person who puts in the dollar and gets the coin? Why would you take a token or a coin or whatever you want to call it that has no yield? Well, the answer is, and I'll use Tether as an example, but there are many of them at this point. Tether is the currency of choice in the crypto world. Most Tether are used to buy Bitcoin. And you say, well, why don't you just go buy Bitcoin? Well, the answer is you might want to sell the Bitcoin, buy another cryptocurrency. You might be in and out of several currencies. You might be in crypto world for a long time. So Tether is your currency, if you will, in crypto world. So first you buy the Tether, and then you use the Tether to buy the Bitcoin. And, good luck with your Bitcoin. You can make or lose a lot of money. That's fine. That's a separate issue. And then at some point you may want to sell your Bitcoin for Tether and then use the Tether, keep the Tether or use it for something else. So Tether is the currency in crypto world. Most of it, and by the way, this is all documented. These are not just hypotheticals, but most Bitcoin are purchased with Tether. So the user buys the Tether and can be used to buy Bitcoin. The sponsor gets the cash and buys treasury bills and makes a lot of money. So what's not to like? The sponsor should make a lot of money, and the user gets a valuable currency that they can use to buy Bitcoin. So why do I say that this is perhaps the greatest threat to the international monetary system? The answer is, let's just look at some of the things that can go wrong. Now, there are many stablecoin sponsors. I have no doubt that almost all of them are very legitimate and they do exactly what we just described. But I would be shocked if there's not at least one fraud going on. In other words, what's to stop? There's no transparency in this market. There are no audits. There's really no accountability. So could a sponsor take the money, in my example, and just steal the money? The answer is yes. Has that happened yet? No, but human nature being what it is, it will happen sooner or later. Just think of FTX, Sam Bankman-Fried is in jail right now for running a major cryptocurrency fraud. So if that happens, and I expect it will, and again, I'm not pointing a finger at any stablecoin sponsor, and again, I'm sure they're mostly legitimate, but it would only take one fraud to start a panic in the market, basically a run on the bank, good old-fashioned run on the bank, the kind we've seen throughout history, where everyone races in and says, "I want my dollar back. Here's my stable coin, whichever one it was. I want my dollar back. There's this guy over here who's a fraud, and I don't know who else is a fraud." And there is no transparency. There are no audits and so forth. So what happens then? Well, the sponsor, if they want to live up to their promise, is in the position of having to sell treasury bills, in my example, to get the dollars to pay back the people redeeming their coins. If they have treasury bills, a separate problem, even if you're not a fraud and you didn't steal the money, is it possible that you invested in commercial paper? Did you invest in equities? Did you invest in corporate bonds? Did you invest in some other instrument? Again, not a fraud, legitimate investment, but something that had a higher yield because you were greedy and you wanted something, with a higher yield than treasury bills. That's a possibility. In fact, there's some evidence for that. Tether settled a enforcement action from the New York State Attorney General. And in doing so, they offered the only thing I've seen, which was a pie chart of what they invested in. It was not an audit. It was not a balance sheet. It was a pie chart. But it showed that over 50% of the assets were invested in commercial paper, not treasury bills.
This is the critical red flag. Commercial paper isn't cash. It is corporate debt. In 2008, this exact market froze completely, forcing a Fed bailout. He is suggesting that the backing of these coins might be much riskier than the dollars they claim to represent.
Now, what is commercial paper? Sorry to get too legalistic, but this is where the problems arise. Commercial paper is an unsecured corporate IOU with a maturity of less than 1 year. So in theory, liquid, but just remember what happened in 2008. General Electric commercial paper froze up, and the Federal Reserve not only bailed out the banks and the money markets, but they had to bail out General Electric because that commercial paper became illiquid. So first problem is, did you steal the money? And I have no doubt that somebody did, even though most of the operators are perfectly honest. Second problem is, did you invest in the most liquid instruments or other instruments, in which case you might not be able to sell them fast enough to redeem, or worse yet, you're selling them at a discount in a kind of fire sale environment where you're not even getting your dollar back because you have to sell it at a cheaper price because it's, as I say, it's a fire sale, and the buyer knows you're desperate, so they just offer a lower and lower price. The third problem is, even if you have treasury bills, that would be the best case where you really did buy the most liquid, safest instrument. There's no fraud or chicanery going on. Again, I have many years of experience in the treasury market. It's big. It's not that big. You can't sell $100 billion of treasury bills overnight. You can sell 10 billion. That would be a big order, but 100 billion, no.
Pay close attention to the mechanics of a crash here. Liquidity is an illusion. Even the US Treasury market, the deepest in the world, cannot handle a $100 billion panic sale overnight. This is how a crypto crash transforms into a global banking crisis.
So even the most liquid market can break down. So in this world, will there be, is there enormous leverage? Yes. Is everybody playing it straight? Almost certainly not. Most are, yes. I'm not disparaging anyone, but there's certainly a fraud out there. And even if you're not a fraud, you could be invested in illiquid instruments. And even if you're pristine, your hands are clean, you've invested 100% in US Treasury bills, the market's big, but it's not that big in a panic situation. So my concern would be that, well, not just concern, I just from experience, this will happen. The market will freeze up, exactly what happened in money markets and commercial paper in 2008. The Fed will be very reluctant to bail it out. I mean, the Fed gets criticized when they bail out money market funds, because they're not banks. I mean, bailing out banks is kind of their area of responsibility, but not money market funds. But they did bail out money market funds. Would they bail out the crypto equivalent of a money market fund? I'm not so sure. They might just let it fail as kind of a lesson. And then there you get into the issue of contagion, where a failure in one market very quickly leads to failures in other markets. Because if I'm the crypto holder, the stablecoin holder, and I redeem, and I say, give me my money back, and you say, sorry, I can't, we're having difficulties right now, I may be desperate. I may sell something else. I may sell stocks or corporate bonds or other instruments just because I need the cash and I can't get it from my stablecoin. So this is called contagion, where distress in one part of the market spreads to another part of the market. By the way, the mathematics of financial contagion are exactly the same as real contagion. Viruses and bacteria. There are mathematical models as to how they.
This is called the contagion effect. You don't even have to own crypto to get hurt. If stablecoins collapse, forced selling hits stocks, bonds, and real estate. Rickards is warning that this isn't just a crypto problem. It is a systemic risk to your entire portfolio.
We went through them all with COVID, of course, but they're long-standing models. The SCIR model, it's susceptible, exposed, infected, and recovered. Or they leave out dead, but a lot of people die. You have to factor that in. But the math is the same. So you could be looking at a global monetary crisis triggered by a crisis in stablecoin, which is almost certain to happen, because stablecoins, at the end of the day, they're unregulated money market funds. They work like money market funds, but there are no limit, there's no transparency, no audits, no limits on leverage, etc. So to me, that's a ticking time bomb waiting to explode.